Hi, welcome to the market alert for Thursday, the 17th of August 2023. So yesterday we saw the inflation numbers come out, shortfall in the rate of inflation. Let's just have a quick look, a recap of what those numbers were. And you can see that we came out at 6.8, forecast, or previous rather, was 7.9 and the forecast 6.7. Whilst we're here, economic news today to move the markets. What have we got? Just the unemployment numbers. These are the weekly jobless claims from the US, and they will be released at 1:30. Okay, let's have a look at the other news headlines. Stocks and commodities and bonds crumble as dollar rips on hawkish Fed minutes. So more inflation to come. FOMC minutes signal hawkish Fed fears significant upside risk to inflation. So inflation's back on the cards there. Dollar firms while stock and bonds slide amid hot data and FOMC minutes there as well. Talking of the dollar, you can see it's broken the 200 MA there, so continuing to move higher is going to put further downside pressure on the metals, despite the fact that they show a bit of consolidation for yesterday. Hawkishness is positive for the dollar, negative for the metals prices. Let's have a look at the markets, how they reacted to it all during yesterday. And starting off with the Dow, you can see we had another down day there to the... no, we didn't, because that's not the Dow. And in the Dow, you can see that we traded down to the 50 EMA yesterday and the 62% retracement, which we spoke of. A bit of demand there, and we're trying to get back above the 50 in the stochastic oscillator there, but not much movement on that at the moment. Market showing a bit of support overnight, and if you look at the 30-minute chart, you'll see that we're already down to the low. We've been through and tested this, and we're trying to bring this market back. Close back below this anytime during this morning. We'll see the market move lower and head down towards the 78.89 in the daily chart. And in the German DAX, also trading down to the 78% retracement, taking out yesterday's low on the overnight already. Narrow bar for yesterday, considering the positiveness of the UK CPI numbers. You can see there that the initial reaction, the market moving higher and then just stuck in a sideways range until the dollar moved lower. Overnight, prices below the low and coming off this, bouncing, but struggling at the moment to close below that low of the yesterday's low. We'll see the market head down towards 89 and also the 200 MA there. And in the S&P 500, this too trading to the 89% retracement. Still some selling around for yesterday, seriously oversold. And in the 30-minute chart, electronic up with the UK CPI numbers, tried to move higher in the cash open, but then just took out the low, tried to regain it, but then succumbed to the selling pressure. And already overnight we can see that prices have traded below the low and heading back there now, so still further weakness around with this market. The FTSE 100 down yesterday on the CPI numbers, heading for 89 at the moment, and also the low to the left as well, which is, let me just add this in, you can see there 7226. So that's the area where the market is likely to head to. And in the 30-minute chart, an initial positive reaction to the CPI numbers, struggling at the close, the market then moving lower, sideways. Overnight, the market trading below the low of yesterday, trying to bounce off the S1, but finding resistance at the close and the low. So a close below the S1 will see prices continue to move lower. And finally, in the metals, silver starting to get into a sideways move. Expect the shakeout to come, though, through $22 per ounce. And in the 30-minute chart, up yesterday with the UK CPI numbers. But this didn't last long, as we saw the market's reaction to the spot price at the open yesterday. The market down and now up off the lows at the moment. But expect those lows to be retested with the dollar strength continuing. Same for gold, down to the 1892 level. This has got to hold. If it doesn't, then we're going to go much lower, as you can see in the weekly chart. The next downside target will be the low of this bar, which goes back to the 23rd of June at 1892.83. If that's taken out, in the gold price, then we can start to move down towards the 200 MA, but taking out the 78 and 89 first en route in doing so. So 30-minute chart for yesterday, up a bit with the UK CPI numbers, back to the close, 89% retracement, and then sold off. Absolutely hammered yesterday, and that's reflected in the gold silver ratio, which we'll just have a look at now. So in the gold silver ratio, you can see that we're down slightly yesterday. That's because gold came under an absolute pummeling yesterday, as we've just seen, but still stuck in this sideways range. It's not over for silver yet, still monkey hammered, I reckon, down to $20 an ounce, just for the sheer fun of it. So we'll have to wait and see, but that's how it's looking at the moment. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.